In the early 1990s, Japan looked unstoppable. Its economy was the envy of the world. Tokyo real estate was worth more than all the land in the United States combined. Japanese companies dominated global markets. Banks handed out money like the boom would never end, and then it did. But unlike most crashes, Japan didn't collapse overnight. It slowly sank, quietly, year after year. This is the story of how one of the richest nations on earth entered an economic nightmare that lasted decades, and how it still hasn't fully escaped. It started with confidence. In the 1980s, Japan's economy was growing at a breathtaking pace. Exports soared, manufacturing ruled the world. The yen strengthened and global investors rushed in. To keep growth high, Japan's central bank made a crucial decision. Interest rates were pushed lower, money became cheap, borrowing exploded, and soon that money stopped flowing into factories and innovation and started flowing into assets, stocks, land, property. Prices rose fast, then faster. Land in Tokyo was traded like gold. Companies used rising real estate values as collateral to borrow even more money. Banks stopped asking hard questions. Why would they? Asset prices only went up. By the end of the decade, Japan's stock market had become the largest in the world. The Nikkei index soared to historic highs. At the peak, Japanese assets made up nearly half of global market value. It looked like a miracle, but miracles built on debt don't last. In 1989, the Bank of Japan panicked. Officials feared the bubble was growing too large too fast, so they did what central banks often do when they're afraid of overheating. They raised interest rates, and that single move cracked the entire system. Borrowing slowed, speculation stalled, asset prices stopped rising, then they fell. Stocks dropped sharply, real estate prices followed, collateral vanished. Companies that had borrowed against inflated assets suddenly owed more than they owned. Banks were exposed. But instead of forcing losses into the open, Japan chose a different path. They pretended everything was fine. Bad loans were hidden. Zombie companies were kept alive with new credit. Banks rolled over debt instead of writing it off. The crash didn't look dramatic. There were no massive riots, no sudden unemployment explosion, no overnight collapse. Instead, the economy froze. Growth slowed, then stopped. Investment dried up. Wages stagnated. Prices didn't rise anymore. They fell. Japan entered deflation, a silent killer. When prices fall year after year, people stop spending. Why buy today if it will be cheaper tomorrow? Businesses stop investing. Profits shrink. Debt becomes heavier in real terms. The government tried to fix it. Stimulus packages, public spending, massive infrastructure projects, bridges to nowhere, roads with no traffic. Debt exploded. Japan's government debt climbed to levels never seen before in a developed nation. Still, growth didn't return. Years passed, then a decade, then another. The lost decade quietly became the lost 20 years. An entire generation grew up without real economic opportunity. Young workers accepted lower wages and unstable jobs. Lifetime employment vanished, confidence faded, and the population began to shrink. Fewer children, more retirees. The economy aged just like the people. Even when global markets boomed, Japan struggled to move. Interest rates dropped to zero, then below zero. Money became essentially free. Still, nothing. The country was trapped. A bubble created too much debt. The crash was never fully accepted, and the system was kept alive artificially for decades. Japan didn't fall, it stalled. Today, its economy is stable but smaller in ambition, innovative but cautious, rich but burdened by the past. And the lesson is brutal. You don't always pay for mistakes immediately. Sometimes the cost stretches across generations. Sometimes the damage isn't loud, it's slow. This wasn't a failure of intelligence. It was a failure of timing, denial, and fear. Japan tried to avoid pain. Instead, it prolonged it. Because in finance, losses ignored don't disappear. They wait. And when they finally surface, they shape the future for decades. This is what happens when a bubble bursts and no one lets it fully break. Welcome to Cash and Chronicles, where money, power, and history collide.